Hi. Let's learn about the Housing and Economic Recovery Act, HERA. The Housing and Economic Recovery Act was created to address the fallout from the subprime mortgage crisis of 2008. It allowed the Federal Housing Administration, FHA, to guarantee up to $300 billion in new 30-year fixed-rate mortgages for subprime borrowers. This means that people who were previously unable to get a mortgage due to poor credit history or other financial issues were given the opportunity to become homeowners. Lenders were required to write down the balances on principal loans up to 90% of their current appraised value. This helped make housing more affordable for those who were struggling financially. The main goal of the Housing and Economic Recovery Act was to renew public faith in government-sponsored enterprises such as Fannie Mae and Freddie Mac, which provide home loans. It provided support for states to refinance subprime loans and established the Federal Housing Finance Agency, FHFA, to regulate these enterprises. The Housing Assistance Tax Act offered a refundable tax credit for qualified first-time homebuyers. This helped make homeownership more accessible to people who may not have otherwise been able to afford it. The act also provided emergency assistance for the redevelopment of abandoned and foreclosed homes. The FHA Modernization Act increased the FHA loan limit, mandated a 3.5% down payment for all FHA loans, and placed a moratorium on certain fees. It also allowed for the insurance of refinance loans for distressed borrowers, making it easier for them to stay in their homes. This part of the act required all states to implement a mortgage loan originator licensing and registration system. This was done to ensure that homebuyers are dealing with credible originators and lenders when seeking mortgage loans, providing greater consumer protection. HERA addressed some of the most important shortcomings of the mortgage lending industry following the 2008 financial crisis and housing collapse. The purpose of HERA is to prevent the circumstances that could result in a repeat of the crisis, including predatory lending. HERA was passed by Congress as part of a joint effort to support recovery in the mortgage industry and restore confidence in both Fannie Mae and Freddie Mac. It was signed into law by then-President George W. Bush. The Federal Housing Finance Agency is responsible for supervising and regulating entities such as Fannie Mae and Freddie Mac. It also oversees the stringent regulations for mortgage loan originators and lenders through the Secure and Fair Enforcement for Mortgage Licensing Act of 2008. Title V of HERA mandates nationwide standards for licensing and registration of mortgage loan originators, ensuring that consumers are dealing with reputable professionals when securing mortgage loans. HERA was designed to promote a stable housing market for borrowers, lenders, and investors, protecting against predatory lending and unfair practices. It affects anyone who owns or plans to buy a home, providing confidence and stability in the housing market. Here are 4 key takeaways. 1. The Housing and Economic Recovery Act, HERA, of 2008 was a piece of financial reform legislation passed by Congress in response to the subprime mortgage crisis. 2. HERA allowed the Federal Housing Administration, FHA, to guarantee up to $300 billion in new 30-year fixed-rate mortgages for subprime borrowers. 3. HERA is composed of several sub-statutes, including the Housing Assistance Tax Act, the FHA Modernization Act, and the Secure and Fair Enforcement for Mortgage Licensing Act. 4. HERA established minimum down payment standards for FHA loans. Hope this would help. Thanks for watching.